5 IPOs closed last week, including the much awaited IPO of Tata Technologies, which was the first IPO from Tata Group in nearly 2 decades. What are the likely listing dates, and what do you think, what are you reading about the listing premiums of these issues?
Okay, so the listing is going to be a busy week from starting November 28th. So, and it will go on till around the 5th of December. When I'm just picking on the top 5 companies that we are looking at: IREDA, Indian Renewable Energy Development Agency, that is IREDA; Tata Technologies, as you mentioned; Gandhar Oil Refineries; Flair Writing and Fedbank Financial Services. All these IPOs recently closed despite being a truncated week.
Let's start with IREDA first.
Yeah, so IREDA, the grey market premium is likely to be 10 rupees. IPO price was 32 rupees. Expected listing gains are 31%. Date of listing is 4th of December. Now, I'll just elaborate on what this GMP, IPO GMP is. It's the full form of grey market premium. Refers to the difference between the IPO issue price and its trading price in the grey market. Now, before an IPO is officially listed, there is a trading that happens unofficially in the grey market, and that has a price. So, the GMP is the difference between the issue price and the grey market price.
Right.
Now, it must be noted here, it is important to note here, that this is not always an accurate predictor of what the price is going to be at the listing time, because it does not take into account the institutional investors.
Right.
So these are individual investors who are indulging into this grey market operations. So, but it is quite an indicator of the sentiment of the market.
All right.
So I mentioned about IREDA. I'll go on to Fedbank Financial Services. The issue price was 140. On this, the grey market price has not yet been out. So it is still in the listing of this stock is going to be on the 5th of December also. Gandhar Oil, a big one. IPO price was 169. The grey market price hovers around the 75 rupees mark on this. Expected listing gains are 44%, and this is going to be listed on the 30th of November. Now the big one, Tata Technologies. The IPO price was 500. The grey market price is 410. So that is the gains that you are looking at. Expected listing gains 82%.
Wow.
It's going to be listed on the 30th of November also. Flair Writing, the last of the top 5. IPO price was 304. On this, the gains are expected gains are not too much, 26%. Grey market price is 80 rupees 80.
Right.
And it is this one is expected to be listed on the 30th of November.
I mean, 30% gains are not bad, Amit. Like, by no account, one day gains listing gains are 30%.
On a comparison.
Of course, definitely. When you are expecting
82%
gains
Tata
for Tata
Technologies,
Tech, 26% doesn't seem like
Gandhar
a good
Oil
deal.
44%.
Wow.
So yeah, so 22%, 26% does not look so good, but it is good.
And the kind of interest we are seeing in, the primary
markets.
2.6 lakh crore application amount was received for Tata Tech.
Yes.
So retail investors are really getting on that primary market bandwagon.
And all of them have been oversubscribed.
Wow.
So, and these are the top 5. Then, as you know, the list is a long one.
Right. So these were the main board IPOs, and there are others in this SME segment.
SME segment, which it'll take another long episode to look at each one of them.
Exactly. Let's also look at how the markets are doing, Amit. So I'm made to believe Nifty is, as of 10 a.m. is holding above that 19,800 mark. At 10 a.m., Nifty 50 was up 0.13% at 19,820. So on an intraday basis, it seems we are holding above the 19,800 mark, which is a good news for the bulls. So at the day's low, we were at 19,806, so holding firmly above 19,800. Sensex, on the other hand, has slipped by below the 66,000 mark. It's just marginally below that. Mid-cap index is pretty much hovering around that 40 to 150 mark, whereas small cap indices has is also holding up just below the 13,900 mark. Now, with that, let's also bring on board Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services. Sir, we have seen a flurry of IPOs, and me and Amit were just talking about, how well they have been received by the street. What are you making of this sort of exuberance that we are seeing in the primary market?
Thank you, Suyash, and morning to all of you all. This only shows that there is ample liquidity in the market, both secondary, primary, and otherwise. Remember those days when even two or three IPOs used to hit the market with a decent amount of issue size. There used to be a fear that there will be liquidity sucked out of the secondary market and pumped into the primary market. But over the last couple of years, not only about 10 days back or 2 weeks back when these five IPOs hit the market, but even before that, there have been instances where a couple of IPOs have hit the market and the secondary market has been intact. And there has been tremendous amount of exuberance in terms of investors' attraction towards this IPO. And those IPOs have got subscribed multiple times. So the fact of the matter is a couple of things. One is that you should have a decent business when you go and hit the street for IPO. Second is your management should be capable enough to take that business forward. Third, and the most important thing is the valuation. If you value or if your financial advisors advises you appropriately and if you price the issue at an appropriate level and you leave something on the table for the investors, I'm talking about investors, I'm not talking about gray market or listing guys,
Right.
listing profit kind of investors. Definitely those IPOs will attract a lot of subscription. So a lot will depend. I mean, we are talking about this couple of weeks back. Hanosa hit the street. Valuation was rich. Stock got listed marginally at a premium, and that was 10% lower circuit, and then the stock appreciated because of the fair valuation.
Right.
So you should have these things in mind before you subscribe for the IPO.
Good morning, Gaurang. We took into account just the top five: Flair Writing, Tata Technologies, IREDA, Gandhar Oil, and Fedbank. Now, for the investors who are not able to get subscription in the IPO, which of these, according to you, should they look at the time of listing to invest into?
So let me say this. In terms of business and valuation, all five of them were fairly priced. One or two of them were attractively priced. So out of these five, we had two recommendations for the IPO as a subscription note. And that was, of course, Tata Tech and IREDA. These two, we had come out with a IPO note and we had subscribed recommendation. Now, I don't know at what level the listing is going to be of these two names. Definitely going by whatever your commentary and assumptions of the gray market prices, Tata Tech would be one of the most attractive in terms of listing gains, and then followed by the rest. So those who have missed out or who wanted more number of shares, but given the lot size, if you're not satisfied and if you have appetite for more, I would only say that let the listing euphoria settle down and let some sanity come in. Going and buying at listing at a premium of whatever it is on the higher side may end up, possibly you investing at a higher level. So let the dust settle down, give it a day or two, and then possibly decide whether you want to invest or not.
Now, Gaurang, given the increased retail participation, SEBI over the weekend also came out and said that they'll perhaps, check the rules for higher valuation or the valuation premiums that these companies are coming out with. What do you make of these comments? Was this the need of the hour to protect the interests of retail investors?
See, Shuyash, the most important aspect about having any kind of regulation is in place is having the investors' interest at paramount or at pinnacle of everything else. Because if you lose investors' trust, then you lose everything. So I think SEBI, not only now, but SEBI has been doing it over a period of time in terms of regulating, bringing in discipline. We all know what over-the-counter, exchanges do and what kind of stories we heard recently in terms of certain, routing of money or whatever be it. So my sense is that first of all, it is the obligation and responsibility of the financial advisor to advise the promoters appropriately in terms of fair valuation. If they do their job right, Suyash, I don't think any other regulator would want to step in. But
Right.
if the regulator finds something amiss, then they will definitely step in and bring in that kind of regulation to possibly discipline the market and investors having a long-lasting faith in this asset class as an investment idea.